Hi, Karthik. Welcome. Lovely to meet you, and so nice of your investor to refer you on to talk tonight. I'm looking forward to the panel. I was wondering if you could tell me what brought you into this area, this field, and what your passion is in this area of credit.
Yeah, so I started my career at FICO, the company that does the FICO scores. But that's what they're well known for. But my work specifically at FICO was to help some of the largest banks in this world to help make better risk management decisions. That could be from underwriting, origination, or to all the way to account management or collections of fraud. And through my work at FICO, probably made them close to about $1 billion in additional revenue. By this, I don't mean paper profits. I mean actual realized gains that are reported on the balance sheet. Post-financial crisis, however, it was a personal soul-searching moment for me in the sense that here I am helping all these sort of mega banks help make a lot of money, but they never really wanted to cut a slack for consumers. So it was really challenging to have a meaningful conversation with most of these largest banks about helping consumers. If they've already made lots of money, why not actually simplify lending, simplify some of the things that they actually do instead of all these complexities with respect to specifically focused on credit cards. The APR is too high, penalty pricing, fees, and all this complexity. Nobody really understands them. Even for people who work in the industry, it's really hard to decipher. So for me personally, I really wanted to build a consumer-facing product that consumers will actually want to engage in and be appreciative of. And at the same time, it's not for charity. It's a for-profit corporation, but I think we believe in making money the right way. And you can do that by eliminating all the complexities that exist in the ecosystem. And that's really what drove me personally to start SimplyCredit.
That's so inspiring. I'm actually a Tibetan Buddhist, and we talk about right livelihood, and you basically created a company that has a right livelihood.
Thank you.
Correct? So I think that's awe-inspiring, and also earning revenue and money from that without having to become greedy, which I think is what you're talking about with the big banks, that they're skimming so much out of this, but never really giving customers a break.
Yeah, and I think it's also important to understand consumers are usually okay paying interest when they borrow money. It's never a question that charging interest is fair or not, but it doesn't have to be predatory in nature, and which is what a lot of these larger institutions have gotten into, is to make these terms so onerous, it's very difficult for people to get out of debt. But if you really give them a path to get out of debt in a meaningful way, they will be, sort of essentially have a path to financial freedom. At the same time, the company that is helping them do that can make money as well. So I think in a just and fair terms.
So what's your secret sauce, and how does SimplyCredit fix that?
Yeah, so for us, we started the company with a single realization that consumers love credit cards. And it's strangely, the reason for that is if you think about consumers, they don't like the credit card issuers. The net promoter scores for these largest credit card institutions are abysmally poor. It's really, really bad. But you need to ask the question, why are they still flocking to these large institutions when the scores are really bad? And it turns out it's these attractive rewards programs that they put on these credit cards that drive people to spend more and at the same time try to charge them a ridiculous amount of high interest. So what SimplyCredit really aims to do is acknowledge that behavior. Consumers are going to use their credit cards, and it's going to be very challenging to get them out of it if all you do is just give them some amount of money. So the way we tackle this problem is say, use your credit card, normally spend on it, but you don't have to pay the 20% APR or the 25% APR on the credit card. Instead, we work with normally smaller partner banking institutions who wouldn't otherwise have the same ability to compete with the likes of Capital One. We move that money that you put on your credit card into a fair lender, somebody who can give you, instead of a 20% APR, a 7% APR, and really helps you get out of debt faster. And we enable these transactions to happen. For you as a consumer, we're not asking you to fundamentally change your life, or your behavior, in the sense where you are cutting up your credit card and throwing it away, never to use it. That never happens. Mm-hmm. People always resort to credit cards. But you don't have to be stuck in this debt spiral, which is what we enable the consumer to do.
So basically, what's driving that behavior with the big banks with customers is that they're wanting to get more miles with United,
That's right.
even after
All
passengers are
things-
being thrown out.
Exactly, yeah. And people, I mean, there was a recent study that talked about how, consumers are obsessed with collecting these miles points and other kinds of points, even though many of them don't actually redeem. And the value of those points don't really amount to the interest that they charge. What I find even more fascinating, United Miles is one example of this, but what I find even more fascinating is if you go to like stores like Home Depot or Sears or any of the big box retailer, if you go buy a refrigerator or a washing machine or something like that, the first thing that you would get, the sales clerk will come to you and say, well, how about you open this credit card and you get 15% off? And you do the math and you say, it's $3,000 for this fridge. And if I get 15% off, that's $450. Wow, that's a lot of savings. And you say, oh, sure enough, I'll take that credit card. So, yeah, and you don't realize behind the scenes, there's a 30% APR on the credit card. They will say, oh, it's 6 months, no, 0%, you can just pay it off. Most consumers are always optimistic about their finances. What essentially happens is they think, oh, great, I've got 6 months to pay this off, and I am going to essentially, take this $450, whatever they call it, a discount, and I would save a bundle. But it turns out most of these store cards have deferred interest rate, which means the first 6 months they don't charge you any interest. The 7th month they go back in time from month 1 all the way up to month 6. They compound the interest and then charge you all at once at month 7. So that's a huge interest rate shock or an interest payment shock that you see on month 7. Wow. And this is, consumers don't realize it. And surprisingly, if you think about it, you thought you saved 15%, but your APR is 30%. And it's all the savings are going to get eaten away just by this interest. And on top of that, if you keep holding onto this card or these balances for a longer period of time, you're going to be in deeper in debt than you actually started out. So these are the types of gimmicks and sort of practices that credit card companies use on consumers that they don't even realize.
It's like a covered-up deception almost, really, yeah. So tell me, where do you think credit's going? What's the future for credit? Hopefully a brighter one?
Yeah, definitely. I think credit is not going to go away anytime soon. People need credit, and that's sort of engine of any economy. But I think more and more companies like SimplyCredit that enables a long tail of institutions that are pro-consumer and are willing to help consumer and put them first before profit. And those are the types of institutions that will eventually win. And I think companies like us are enabling these sort of institutions to really take charge and actually compete with the likes of American Express and Capital One. And when you have a healthy banking ecosystem and there's a healthy competition, the consumers win. Right now, at this point, credit market, at least in the consumer credit market, is an oligopoly. The top 10 credit card issuers have quite close to 95% market share. And that's unsustainable if you want the type of sort of society we need, like there is true and fairness. And that's not going to happen when you have an oligopolic nature of finance.
So fabulous that you're in such a right livelihood profession. Fantastic. And so just to finish the interview, but it's been fascinating, is can you tell me a funny story about something that's happened to you while you've been as an entrepreneur?
Yeah, I think I guess as an entrepreneur, you go through a lot of ups and downs, but I think the funniest moment that I've had, probably in a strange way, is Joyce and I. Joyce is my co-founder at SimplyCredit, and she and I, we were going to meet with an investor, and we had met at another place, like Common Place before, and we were chatting about the plan for the investor meeting, and we get in the car, and Google Maps said basically it's about 10 minutes from where we were. So Joyce and I, we were driving 2 separate cars, and we said, okay, let's meet at the investor's place. So we punch in the directions, I click go, and I put it on my car, and I start driving, and so did Joyce. At 2 minutes later, she takes 280 to, there was an entry ramp for 280, and she goes, and then I'm like, oh, that's not what my maps are saying, so I continue, and then I keep going. This is on basically near Palo Alto. I keep going up, this is up the hill, keep going up, and at the very top of the hill, Google Maps says, make a sharp right turn. And so I stopped there for a second, and it doesn't look right. And I just stopped there. It's basically a bicycle path down the valley that gets you down to the other end. And once I reach up the hill, my network reception goes away, so I don't have maps either.
Oh, no.
So fortunately, both Joyce and I are very conservative in terms of planning things. So we gave ourselves 1 hour buffer to get to the meeting. And 30 minutes goes by, she didn't hear from me, she was panicking, she's like calling me, it goes to voicemail. Eventually, I drove around somewhere, eventually got to the investor meeting. And that also turned out to be one of the investors who funded us. It was a very interesting story.
So Google Maps totally let you down in that instance.
Yeah. Now, these days, I look at both Apple Maps and Google Maps to decide whether I'm going in the right direction. It's really sad. Like, this day and age, you really need to have two different versions of mapping technology.
And they say that our brains, that where we used to be able to find our way before all this technology, now that's actually getting smaller and it's harder for us to do that without the technology, which is a sad thing, I think.
Yeah, totally. I mean, it used to be a time I used to remember all my friends' phone numbers by heart. Now, all I know is 3 phone numbers. So it's really sad. Yeah.
Thank you so much. This has been a totally fascinating conversation. I'm really looking forward to the panel tonight.
Likewise. Thank you.